Okay, folks, welcome to Best Stock Charts for the coming week. Here's what we're going to go over today on Best Stock Charts. First, we're going to talk about how was our week last week. Then we're going to talk about the price action of Deutsche Bank, which I have been pounding the table on for months now. And then we're going to segue into Best Stock Charts. But before we begin, as a reminder, the new website, the brand new, the Contrarian Trader website, including brand new members dashboard, is on target to be launched by Christmas. Prices are going up, so please take advantage of the current prices because you'll be grandfathered in, as we do not raise prices for existing members. And if you're not currently a member, you're not ready to go forward yet, that's cool. Enter your email address on the website. We hate spam too. Get all of my videos. If you're a YouTube fanatic, you're always on YouTube, follow me there, give me a like, and click that bell. That way you'll get notified of future videos as well. And before I forget, I do this every single video. I list below, if you're watching this on YouTube, or I list above, if you watch this on the website, the symbols in order of which I will review them. So if you want to skip around, go for it. They're listed in sequence below, again, if you watch this on YouTube, above if you're watching this on the blog. So let's get to it. Here's a clip from Swing Trading Today. I believe it was June the 26th, 2018, regarding Deutsche Bank. And the banks I'm very concerned about because the share price of Deutsche Bank is just absolutely getting clubbed. Now, many of you out there are saying, what does Deutsche Bank have to do with the price of a can of corn here in the United States? What it has to do with is the fact that there is something called counterparty risk. You can go back, type in counterparty risk, filter it out for 2007, 2008, any type of video commentary back then, and all you heard about was counterparty risk. In short, if you see Deutsche Bank, the largest bank in Germany, probably the largest bank in the EU, trade down into the single digits, you're going to hear all about who's got counterparty risk to Deutsche Bank out of fear that this bank may go under. Because this week, this is a monthly chart, this week we broke down below the lows of not the financial crisis. We did that a long time ago. We did that back here in January of 2016. Last week, we broke down below the lows of September 2016. Okay, so fast forward, again, that was from June. We did see a defense of the $10 per share level. To be specific, at the $10.36 level, we rallied, nice rally for that matter. We went into a triangle formation. I wasn't buying it. We saw a reversal bar here the week of the 30th. Fast forward to September, where we actually broke out on a weekly basis, but then the following week failed. That was the harbinger of bad news for Deutsche Bank. And earlier this week on Swing Trading Today, I said, I don't like the price action here. I don't think that Deutsche Bank is going to hold support, and it will, in fact, fail. Fast forward, I think it was that very day, we broke down below the $10 per share mark. Now, as I just mentioned on Swing Trading Today, that clip I just played, the fact that you have Deutsche Bank, the largest bank in Germany, if not all of Europe, trading in the single digits, and having never recovered from the financial crisis, leads one to ask the question, what the heck is going on over at Deutsche Bank? And who has exposure? And to what level? Meaning, what other banks are holding Deutsche Bank bonds, derivatives, etc. Now, last night, I was on Twitter, and I follow Jeff Gundlach, who's a really good, probably one of the best asset managers out there. And sure enough, Jeff was on point. Deutsche Bank price now solidly below 10 at multi-decade low, down massively last 5 years, not getting enough attention from the financial news media. I can't agree with Jeff more. This is exactly what I've been saying for quite some time now. back to the charts. So last week, Deutsche Bank down 11.45%, a massive drop for a bank. And it's going lower, folks. And you may be saying, you know, maybe there's historical support below. No. Quarterly chart. We are at all-time lows on Deutsche Bank. Absolutely horrible. And the news will not pay attention to it until it hits them right in the face. Let's get to best stock charts. And again, folks, these symbols are listed below in sequence in which I will review them on YouTube, and the same deal on the blog, except the list will be above. Let's get to it. All right, so how was our week last week? I didn't go over that. Our week was far better than the markets. That's for god darn sure. We went to cash the week before last, having sold the last of our long positions. Actually, I have a micro cap position, which was actually up last week. But other than that, we have been dipping our toe in the water, buying extreme oversold stocks. And one position that we put on yesterday is a stock that appears to be putting in a double bottom setup. So we're beginning to nibble. We're taking a look at opportunities to the long side. Now, the key here, folks, is I use the tagline, trade the charts, not the hype, or sometimes it's trade the charts, not the story. If you're playing the game of watching a daily chart and saying, wow, this looks good, maybe it's time to buy, because how can it go down any further? I don't care what symbol you're looking at, you're making a mistake. In a market like this, when you're looking to buy stocks which you perceive to be a bargain, you need to buy them at support, historical support. And in all probability, you're not going to see historical support on a daily chart. You're going to need to pull back to a weekly or even a monthly chart to identify where there is historical support. Set up a trade alert on your trading software. Wait for the shares to come to you, and they will. This is a very difficult market for the best of traders to trade. Do not go listening to these thugs on Wall Street or on CNBC coming out with their upgrades when the share price of the Googles of the world, the Amazons of the world are an absolute free fall. Don't listen to the well-dressed salesman that CNBC brings on to try to sell you snake oil. That's what they're doing. Pay attention to the chart. So what we're going to do here is we're going to go over the daily charts of our extreme oversold watch stocks. Tomorrow on the week ahead commentary, I will go over the daily charts as well as the weekly and or monthly charts to identify where we have historical support. But today, we're just going to take a look at the daily charts to discuss as to why they are on our watch list, why I believe that the share price of these names are in downtrends that are reaching a point of being, quote unquote, air quotes, unsustainable and are ripe to rally. What will cause them to rally? I like to boil it down to one of three things, and many times it's a mixture of all three. One, is there a potential for a short squeeze? Two, is it cheap on a fundamental basis? Meaning, are the fundamentals strong? Three, does it pay a dividend? And is that dividend safe? We'll discuss those catalysts tomorrow on the weekend commentary with members. Again, you need to be a member. So let's get to it. First chart up, Central Garden and Pet daily chart. RSI is at 19.05. I spoke about this one about 2 weeks ago. It did rally. We did not get involved. We were not at historical support, but we are nearing it now. It's becoming very, very attractive. And the volume bars to the downside, which I always watch, are beginning to drop off, meaning the institutional selling is beginning to subside. Good stuff. CENT looking good, not great yet. I know there's historical support below. We're not there yet. Friday's price action was very bad. We attempted to set up a base. It failed, and we closed at the lows of the day. The probability of making lower lows next week is very good. So close, but not there yet for CENT. Members, more tomorrow regarding Central Garden and Pet. Rambus We'll use the daily chart here. I spoke about this one about 2 weeks ago as well. I think that we are going lower. After I spoke about Rambus, the shares did rally. We did not get involved. Why? It's because they were not at our preferred risk-to-reward entry point. And sure enough, that rally failed. Now, if you got in early and you got out at or near the top of the highs of the 17th of October, congratulations. Hopefully you got out and you booked yourself a profit. We have only a couple of things that keep our strategy of trading extreme oversold stocks a consistent winner. One of them is to ensure that we are obeying our rule of buying at historical support. We did not get involved because we followed our rules, and the share price will come to us. I'm very confident about it. If you take a look at the price action on Thursday, Friday, 875 was support here on the 23rd. On Thursday and Friday, it became resistance. We're going lower. Members, more to come on Rambus tomorrow. Also note, the Stokes rolling over below 20. We're probably going considerably lower from this point. RSI is no longer on our side. So the oversold condition has been alleviated. Now I think we're going to break down to fresh lows, and quite possibly I'll be lowering the price point at which we want to get involved on Rambus. I think we're going considerably lower from here. The next chart up. This is a new one. Live Oak Bank shares. LOB the symbol. RSI below 10. Very attractive. They gapped down on Friday yet again. Big institutional selling here. You can't fight these guys. In all probability, these shares are going lower. But honestly, folks, 8.94 on RSI is very oversold. We're going to bounce fairly soon. Members, more tomorrow on the week ahead commentary with regard to historical support and catalysts to send the shares higher. Next chart up, Beacon Roofing Supply daily chart, RSI 14.33, very attractive. A possible double bottom setup forming here on Stokes, good stuff. We closed very close to the lows of the day on Friday. That would imply that we're going lower into the coming week. Volume remains well above average. So again, folks, this is not mom and pop selling 100 shares. This is Fidelity. This is Goldman selling their position. You don't want to fight these guys. You need to wait for the volume bars to the downside to drop off dramatically, well below this moving average in red. The next chart up. Parker Hannifin daily chart, RSI 14.51. The Stokes have flatlined here, very attractive. They attempted to rally the shares on Friday. That rally was rebuffed. So what we know now from Friday's price action is that we have resistance right at the 147.14 level to 148.50. Volume is still well above average. Let's let that down volume subside. The next chart up, Bud. Anheuser-Busch Inbev. These are the ADRs traded on the NYSE. RSI is at 14.55. There are a few reasons as to why these shares will probably rally. We gapped down on Thursday. We were trading down below the third standard deviation Bollinger Band. We popped a bit on Friday. The rally faded. We closed at the lows of the day, but look at this volume. All right, so this is institutional selling. The shares will, in all probability, go lower. If they do not hit our support level and they rally, we will not buy the shares. We will not chase these shares. Stokes, I don't like them. They're in a downtrend. I think they're going to roll over yet again. I would avoid right now, but we will be looking to buy Bud when they hit our historic price point, as well as the price action, meaning what we're looking for here on a daily basis. Before we got very aggressive with our buying, we're looking for a bullish reversal day. What is that? Well, a bullish reversal day is a candlestick that looks just like this. You're down on the session, then you reverse to close higher. Same deal here. This would work. a bullish engulfing of the prior day's move. We're not there yet. I think there's more damage to come to longs. I would not go buying these shares as of yet. Oshkosh, daily chart, RSI 14.97, very attractive. Double bottom setup forming. We're kind of flatlined here on Stokes. Now, the price action on Friday was pretty attractive, pretty interesting, in that we were down. They attempted to rally it. They were unable to close it positive. I do not think that we've seen the lows yet, despite this price action. Now, what this candlestick does imply is that there were buyers in enough numbers to step in, move the share price higher, except they were overwhelmed by sellers by the end of the day. Now, normally when you see a candlestick like this, we're going to fail. We're going to go lower. Members will talk more about the price action tomorrow on a historic basis, meaning support levels, tomorrow on the week ahead commentary. Masco, daily chart, RSI is at 15.62. I think we're going lower here because these Stokes, they have a rounding top below 20. In all probability, we're going to get a continuation breakdown here proceeding into next week. Big volume on Friday. Could it be capitulation? Maybe. But I think that we are going lower next week. And again, folks, we're watching for these volume bars to the downside to diminish. If they do not, we can't get involved, even if we're at a historical support level, because that means that there are just too many institutional sellers out there. And that's it for today, folks. Again, if you're not currently a member, take advantage of the 2-week free trial. Cancel at any time. If you're not ready, that's cool. Smash that like button. Leave a comment below. I will get back to you. Follow me on YouTube. If you watch this on the website, enter your email address. We hate spam too. You get a couple of free trade tutorials and all my videos in the future. Everybody enjoy the remainder of your weekend and have a profitable trading week next week. Be well.